Hello and welcome to another episode of Monday Markets. As always, we're brought to you by Woo. Links available in the description below. Let's talk about a few of these charts, mostly as a follow-up to the thread that I posted on Twitter. So on the BTC front, we still are wrestling with the daily failed breakdown. That is to say, a close above 61 to 62k, and now we're back above that same level of previous resistance turned support. So failed breakdowns in general are bullish patterns. You would expect in a purely technical sense for the market to make its way from the reclaimed range low towards the range midpoint at 67.1 and then potentially towards the range high at 73.1. Now, I think this is a pretty good pattern in general. Crypto does well with failed breakouts and failed breakdowns. That said, I think given how the market looks, and I'm still not super convinced by the weekly time frame, but given the magnitude of this daily signal, and given we're not that far away from it at the moment, we're only at 63.5 and 61.2 to 63 is the reclaimed level. This makes for a very good updated kind of invalidation, which is to say that if a multi-time frame failed breakdown in a high time frame area of support isn't enough to send the market higher, then we probably need to go a lot lower to find buyers. So that makes this area really attractive for medium time frame bias, meaning that if we start getting closes, really below 63, but if you want to be conservative, back below the range low at 61.2, I would then infer that the bullish pattern in this instance wasn't enough to send the market higher, and that therefore the market is weak and bearish, and I'd expect this deviation portion not to provide any support, and for the market instead to reach for the aforementioned levels at 45 to 50k. So that's the current read, sort of bullish signal on the daily. It's worth giving it a chance, but sort of abandon ship if it doesn't work. Now, as you can tell, the market's currently slowed down in this area. I think there are two reasons for that, both more or less technical. One is that on the daily time frame, 63k is the point of breakdown, where sort of the origin of the sell-off, if you will, that took us back below the range low. So retracing into that area is the first kind of chunk of supply from a TA point of view. Then from a trend following point of view, if we have the daily 13 or the daily 21 EMA, that's roughly in that area. I'm sure if we add the daily 13, it would also be in a similar area. And also, if we go to the 4 hour and map the 200 EMA, like so, which is a pretty standard tool for trend following, we can see that this is where a lot of the congestion is taking place. So from a TA point of view, you essentially have on the bullish side, failed breakdown versus mean reversion, right? Now, there's no easy answer as to which one wins. It's kind of pick your fighter. I think in general, it's worth giving the higher time frame signals precedence, which is to say, given how we're not that far from invalidation, and given we have daily time frame complements, it's worth giving the failed breakdown signal a chance. But on the assumption, or with the prerequisite rather, that if it doesn't work, then probably nothing's going to work and you get the fuck out the way. Now, what does that mean from a more kind of zoomed out technical perspective? Now, as mentioned, if it starts closing back below the range low, then this entire reclaim argument is a dud and the market would be bearish in my view. That said, if we go down to the lower time frames, the important part is we're not that far away from invalidation for this thing. So considering we know that 61 to 63-ish is that high time frame range low, where might we find intraday levels of support? Because candidly, I think even retracing all the way back to the range low would be a bad look, because in general, whenever you have failed breakdown patterns, the assumption is that you have traders who are trapped and or shorted the breakdown, and as the market goes back up, putting them underwater and under pressure, they are forced to close, and forced to close their shorts and or buy back. And shorts closing result in buy pressure, and buying back results in buy pressure, and so the market goes up. Now, if you don't have that, and you have what looks like a failed breakdown, but there's no urgency on the side of the sellers who ought to be offside, then the entire sort of potency of the setup and the underlying reasoning becomes much less tenable, and the probability of the setup also goes down. So when you're dealing with failed breakouts and failed breakdowns, I think an important implicit ingredient of those setups is urgency. So a lack of urgency, which would be reflected by low volatility, lack of price action, sort of lack of momentum in the opposite direction, just general stagnation, so on and so forth, I think would be a red flag. Which is why, all of that to say, if the market now from this point just starts to sort of consolidate for a while and even make its way back to the range low, whatever, I don't think that would be particularly compelling from a technical point of view. Now, while yes, you could argue that, well, this area gives you by definition the best proximity to invalidation, from a short-term trade point of view, I agree with that reasoning. I think the broader point is more important, which is to say that if the failed breakdown is real, failed breakdown equals trapped sellers and or buyers forced to buy back. If those two things aren't in the market, then expecting a kind of strong reversal is also unreasonable. So a failed breakdown isn't just a technical pattern. It ought to be, if it is a compelling one, a reflection of offside positioning. And how offside can you really be if the market goes fucking nowhere without you and then conveniently makes its way back to your break even? Which is why I think it's important, not only from a price perspective to be aware of what a failed breakdown looks like, but from a time perspective to understand that urgency is an important ingredient of those setups. So where does that leave us on the intraday timeframes? I don't want the market to float back to sort of spend a lot of time retesting the levels. I think that would, as mentioned, put the setup under some peril. So with reference to lower timeframes, I think realistically, if this daily setup is going to work, then either this intraday cluster holds at around 62.8 to whatever the underside of that is, 62.6, or at most, I think one could stomach the market, as long as it does so very quickly, retracing to this previous low or just this level overall at 62k. You could even zone those out, given it's technically on the daily time frame, so it's not too egregious as an area. Sort of 62 to 62.8. That's not crazy, right? That's not that broad, even though the box looks particularly big, you know, on the daily time frame, no big deal. I think if the failed breakdown is going to work, this is the level that should hold, or the area, and that's your invalidation, realistically speaking. Because again, yes, you could make arguments for support at 60k and sort of some sort of shelf here, previous range low, but I think overall the setup looks worse if it makes its way all the way back there. So I'd much rather focus on intraday levels that would allow for a shallow pullback, which is to say 62.8 or potentially at an extremity 62k. Anything else, anything that goes deeper than that or breaks down or spends a lot more time retesting the range low would at least be a different setup. Not to say necessarily bearish, although I think that would be my prevailing view. I think that would be a separate setup. So this setup is some version of the daily failed breakdown is strong and therefore shallow pullbacks of support will hold. That's one setup. And then if the market really starts to bleed and spend more time at the range low, that's a separate setup, which is to say, yeah, things look a bit shitty, but at least proximity to validation is there. So setup one isn't saying that. Setup one is saying the daily reclaim is a strong signal, so shallow pullback should hold. Setup two, the shallow pullbacks didn't hold, things look a bit shit, but you either bet here or you bet nowhere. So that's kind of at least how I'm thinking of this area in my mind. Let me know if that makes any sense. And in terms of trade management, targets, or whatever else, if you get a trigger or are in this trade already, I mean, always manage your own trades. But depending on your time frame, I think on the daily, the earliest trouble area, at least if the setup is correct, is the range midpoint at 67.1. On lower time frames, I really think it's pretty much the same, to be honest. I was going to make arguments for this cluster of highs here or whatever else, but we've already tested them, we've already spiked it, and realistically, if you're getting long anywhere in this area, then you can't even get 1 or 2R targeting 4-hour structure. So realistically, if this range low setup is worth it at all, it should make its way at least to the range midpoint. So yeah, that's the view on BTC. I know I repeated myself a bunch there, but that's, I guess, a habit of this channel. And also, I've recorded a video of this. I recorded this video previously without the audio on, and my appetite for re-recording it a third, nth time isn't particularly high. So that's BTC. Hopefully that makes sense. Let me know if it does or doesn't. In any case, you have Don on Wednesday to tell you what's actually going to happen. I guess this is just some placeholder entertainment, which is completely fine. On the altcoin front, just to update Bonk, which is a funny thing to say, that same range high at 281 held, and we're now pulling back from it. I think if you take the other side of the range where the failed breakdown initially took place at 215, similar to BTC, if you have a strong reclaim, the market shouldn't really make its way all the way back to where that strong reclaim took place. Again, the implicit assumption in failed breakouts or failed breakdowns is that there is significant offside positioning, which is going to be forced to close and or buy back / chase in one form or another. And if you remove that ingredient of urgency, then the setup starts to look like shit. How urgent can it be if the market just hangs around your entry and doesn't run away without you? There's no pressure. There's no impetus to act. So I don't want to see Bonk, if it's going to be strong, making its way all the way back to 215. I think a reasonable compromise is around the range midpoint, which is to say the daily level at around whatever that is. 248. There we go. 248-ish, daily midpoint. You can take this cluster if you like, which has a nice confluence to the previous high at 245. And that would really be the only support that I'd be interested in from a technical perspective. It's kind of there already. I wouldn't mind unless it's done so. Where is this? So the daily close will be pretty instructive here, and then you can play a daily open strategy or previous day low spike or whatever else, or wait for BTC to hit support, and then you look for a wick/discount through the range midpoint. In one form or another, this is really the only area that's technically compelling for Bonk to hold. Otherwise, if the mid-range doesn't hold, the assumption is the range low, and the range low would mean that the reclaim setup looks bad as a whole. So something risk-defined on this week would be quite nice. For example, if we keep setting this cluster of lows and then spike it on Tuesday or Wednesday and then make our way back above the range midpoint, that'd be nice. At least that gives you invalidation, right? But I think really this is the only tradable area for Bonk. The pullback from the range high is reasonable, but if it's bullish, the range midpoint should hold. On the Dogecoin front, refunds from Don if it goes wrong. At the time I was tweeting this range high resistance level, that's where the pullback came from. Interestingly enough, this has already spiked previous day's low. That said, that previous day's low isn't exactly at a high time frame area of support, so on its own that may not be enough. If we go down on even lower time frames, then realistically I think if you're going to be breakout trading this thing, a daily close back above 16 cents is necessary. If you're looking for lower time frame entries, it's either got to be the spike or my slightly preferred version, a spike into this consolidation here, which looks very generous as a box or whatever else, but you don't have to draw it as one, because if you look to the left, there are a bunch of levels here, a cluster of highs, if you want to get more specific with it. So that's similar to Bonk, that a shallow pullback is the only thing I think the market could tolerate. If it makes its way all the way back to the range low, I think again the setup looks a bit dodgy. Why have you retraced the entire bullish move, so on and so forth. So hopefully you're starting to see a bit of a theme emerge here, which is to say, assumption number one, failed breakdowns are bullish. Assumption number two, failed breakdowns will only remain bullish if the market responds with some urgency. Assumption number three, the market failing to respond with urgency by virtue of consolidating or retracing the entire move puts the entire bullish setup in jeopardy. I guess conclusion number one is that in this regime, or given 1 + 2 + 3, the only acceptable form of doing business on the bullish side is via shallow pullbacks. Maybe that makes sense. You could also change assumption to premise or whatever else, but that's my current sort of framework for thinking about these things. Pepe is an interesting one because it sort of structurally is ahead of a bunch of the other alts. This one is slightly on the trickier side. I think this is the resistance level that I tweeted out as sort of, the main focus for this week. And that sort of had a reaction. So really, a shallow pullback, similar for reasons stated moments ago, is your best friend. I quite like the cluster of highs we built up just around 800-ish. Because A, it's a good technical level, and B, it's sufficiently shallow. So if there's something risk-defined at that level, that would be interesting for a trade, especially when the market starts to build these sorts of bases or consolidations above a key level. It's always fun when you get a spike into the key level, resulting in a failed breakdown above, sort of back into the range that was formed in that area. So you have essentially range formed, not at support, dip into support, makes it look like the range is broken, back above, you have an invalidation, market's already tested high time frame support, and then you can look for continuation. That's really the focus for this week. If the market's really strong and or shallow, then spiking this range alone will be enough. But that's essentially my focus for this week on the Pepe front. And again, similar to Bonk, similar to Dogecoin, etc. If the shallow pullback doesn't work, I'm really not particularly interested in the deeper discounted levels of support, at least not for the first half of this week. And that might change by Altcoin Thursday or Casual Friday or something of that nature. That's the cool thing. We have a lot of shows on Technical Roundup, so you subscribe to the channel, and it means that you can get updated views as and when they become relevant. A daily close like this on Solana would be quite nice, because we technically had a failed breakout above this level at 150. As you know from previous episodes of Technical Roundup in general, when the market offers you a failed breakout, usually lightning doesn't strike twice. So one failed breakout did its job, and now that the market is looking to close, or trying at least, back above where the original fake out took place, the probability that it's a double fake out is lower than the probability that this is kind of the real move, the real continuation. So daily close would be a good signal for bias for tomorrow, essentially, or the day after. Again, that also gives you invalidation. Anything back below 151 would suck. And then if we get continuation trades, pretty much the pre-breakdown floor is the target for those. And I think the 4-hour kind of tells the exact same story, just a faster moving time frame for your preferences. You essentially have the range high is set. You have your overthrow. It does its job by making the market go lower, and now we're sort of battling with this level again. So I think 4-hour plus daily Solana watch list at 153, 154 is pretty good from a trading perspective. With is the last one. I mentioned that this thing essentially trades like baby pips. This is similar to BTC, where you have a reclaim of a key level, and at this point you just want to see some acceleration and a lack of stagnation at the level. There's not much else to say, depending on how you want to, you could just use the extremity, for example, the lowest low close, that makes the candle closes a bit cleaner. You could use the cluster to account for higher volatility and give yourself some more room. But I think in general, again, similar to BTC, you have a pretty clear line in the sand for medium time frame bias and invalidation. Anything back below $3 would just be a bit shitty. Otherwise, it's kind of worth giving the failed breakdown a chance if you get a good setup, especially given we're not that far. Like, it's one thing when you have a failed breakdown, let's say this is our failed breakdown and the market starts to reclaim it. It's one thing to talk about it here and say, hey, the proximity to invalidation isn't that bad and the signal is still relatively fresh, and, it's worth giving this a chance to develop. That's somewhat interesting and tradable and actionable. Whereas you have a failed breakdown and then it does something like this, and then you're arguing for, hey, look, it's a failed breakdown. It's like, well, yes, thank you, but now it's moved whatever this difference is in price, and you have to consider other setups, range-bound setups, etc. And it's not really a failed breakdown anymore because you've had the bulk of the impulse move. So you always have to know where you are relative to how failed breakdowns develop. So usually there are two phases, or I think of them in two phases. Phase one is essentially when the failed breakdown is still reasonably close to the level it's reclaimed, so you don't feel too bad from proximity to invalidation point of view. And phase two is when it really pushes away and starts to consolidate. At that point, I'm not really interested in trading close to the level, and my proximity to invalidation isn't based on that level itself, but rather if we have a post-failed breakdown impulse and consolidation, that's not as complicated as it sounds. My invalidation and or trading triggers are actually based on the post-reclaim consolidation rather than anchored around the level itself. So with a lot of these, we're not here, which is to say we've had the impulse and now we're consolidating. That would be like here or something. We're still reasonably close to the levels, so I think using them as invalidations is justified. I mean, just as a basic demonstration, if the market looks like this and is consolidating post-reclaim, you're not realistically going to have an invalidation back at the range low unless you're really swing trading and your target's up here, right? Like, realistically, if you want to put on some decent size or have an invalidation that isn't too far from the market, you're going to have to follow the market and be somewhat closer to it. And instead of having the luxury of using the range low itself as invalidation, you're going to have to move up, lower time frames and do whatever else, and be a bit closer to the market. And all of that to demonstrate that I don't think with the charts that we've discussed, we are in this phase because we're still reasonably close to the breakdown levels on BTC, on WIF, on a bunch of these. And that's quite good, or at least it's pretty clear in terms of where your level for bias is. That's really all I've got. Again, sorry for the late upload. Maybe it's still Monday somewhere. It's technically still Monday here, but who knows by the time this gets published. Hope you've all had a wonderful weekend, a great start to your week. Thank you to Woo for supporting the show. I know that got rambly and repetitive in places. I apologize, but yeah, hopefully it was still watchable. Thank you very much, and see you for Don stream on Wednesday. Goodbye.